Good evening and welcome back to the Australian Stock Market Show. My quote for tonight comes from American businessman Thomas Kaplan, who said, "If I'm right about the big picture, I'll be rewarded for my patience." Often we see investors captivated by short-term possibilities, which makes them impatient, and this is opposite to the most important traits of great traders, which is to be patient. Having the ability to ignore the short-term information, resist FOMO, think of the big picture and stay the course is always well rewarded. Each week, we give you the opportunity to turn impatience into an ability to be patient as we answer your questions. Remember, our promise is to give you a response that will help you move forward. Tonight, Dale and I have a goal to help you as we give you our upfront, no BS approach to all things stock market. For our main topic tonight, we look at whether investors should diversify their investments away from the big four to second-tier banks. Which ones offer the biggest potential gains and income, and why now is the time to watch this space. So make sure you stay tuned. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Hello, how are you?
Good evening, Ms. Cox.
That was very formal.
You said that last week.
Oh, this is even more formal.
Oh, so I'm even more
You just upped
formal.
the ante, didn't you?
I did, I try. I try to get better all the time. Had a good week?
Oh, yeah. I've had a lovely weekend, thank you. And what about you?
Me, I have had a good week. I've been a bit busy, but I'm pretty good. I actually had lunch with a full-time FX trader on Friday
Well, that would have been interesting.
we've both known for a long time. Yeah, he pulls his money out of the FX market, and he just laughs at a lot of these retail traders that think they can trade the FX market. It was quite interesting, the stories he tells me about what he sees people do.
It's really stacked against people, isn't it?
Oh yeah, he said unless you're super educated, you're going to struggle big time. Now, he now trades some pretty decent money on it, but he said it takes years to learn how to trade it because they're often the big end of town, if that makes sense, are trying to take your money all the time. So he said you've got to be one step ahead of them, and it's not easy when you're not educated.
And the technology helps them do it.
Yeah, it does, but he was sort of saying, you see some of these YouTube videos of these people trading FX, and he laughs his head off. He said there's no way they're profitable, that sort of stuff. So he said that's the stuff that people are getting at the moment. So, but it's also why it's the most heavily promoted trading on the planet. Everywhere you go, it's FX trading. And
it's a real worry, isn't it?
And every week I get approached by an FX broker trying to us to recommend people to them because they just rape and pillage. But maybe we can do a show about that one day, hey?
I think we should.
Cool. Well, before we get into our first segment for tonight, again, we're going to take some live calls on the show. So if you do want to chat to Janine and I and ask a question, then this is your opportunity to pick up your phone and call us now. The number you need to call is 0392909988. That is 03 for Melbourne, 92909988. To get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. Now, I know you really do want to chat with Janine, so pick up your phone right now because she's champing at the bit to talk to you.
What do I say to that? While we wait for you to call, it is the fourth Tuesday in the month, and this means that we take a look at the world currencies. So let's get into the charts. All right, on the screen right now is the yearly watch list of the world currencies, and I get a gold star for saying that, don't I? Because it's... I'll give you a stamp. Just put out your hand.
No.
I dare you. All right. Now, would you like to take the mouse for a change?
No, you can do that. You're good at this. You love currencies.
My hands are really cold tonight.
Well,
cold hands, warm heart,
can
that's
we
what they
just
say.
talk about the watch list?
Okay. Look, first on the list is the Australian dollar versus the Japanese yen, which is actually up 13% for the year, which has done really well. So I don't know exactly, I haven't really done any research on that currency pair to know what's going on.
No, I haven't on that one either, but pound sterling's also got me excited. It's up 8.82%.
Yep, and then we've got the Australian dollar versus the euro up 8% as well, which is great for the Aussie currency. Aussie dollar versus the New Zealand dollar is up 4.5%. You were talking about going to New Zealand. Maybe now's the time.
They may not let me in.
Australian dollar versus the Chinese renminbi yuan up 1.91%. And then as we go down the board, I'm just going to skip through a few here, down to the Australian dollar versus the Hong Kong dollar, which is actually down 4.8%. So how does that work?
I'm not really sure about how that one's working, but obviously we haven't done as well as against the Hong Kong dollar. When you're looking at the renminbi, we're up at nearly 2% on it.
Yeah.
But
And one that you're really studying hard at the moment is the Australian dollar versus the US dollar, down 5%.
yeah, and that's come back a bit anyway over recent times. But I think that'll get into the green territory in the not too distant future. I think we're going to be a lot stronger against the US economy. But what I'm seeing on the screen with all that green is really that's more of a vindication of how well the Australian economy is, or how resilient it's going to be, over the coming years. I think it's looking really, really good for our market.
Fantastic.
So we're going to look at any charts at all?
Yes, I would love to do that. So let's go and look at the Australian dollar versus the euro.
Yeah.
And we have looked at this one, I think, before, but it was some time ago, and we can see now this currency is actually holding beautifully above this support level at around 64.5 cents.
Yep.
You can see it recently came back, tested that level. I'll just get rid of that cross here, which is a little bit annoying there. We can see down here in July we had this low and it's just reversed and taken off. And so it looks like it's poised to take off, doesn't it?
Yeah.
So this looks really nice. Then we're looking at the Australian dollar versus the British pound
Same here
sterling.
again, doesn't it?
It looks incredible. I mean, I've looked at a few charts where we've seen this sort of sideways zigzag where the oscillations get smaller, and often, particularly with commodities, they take off after this sort of pattern. So it'll be really interesting to see whether the currency ends up somewhere up around this 64 or 6.4.
Well, it's been there before, but it does look super, super strong at the moment, doesn't it?
Yep. And look, the next one I thought we'd take a look at is the one that you're studying at the moment, which is the Aussie dollar versus the US dollar. So what you're suggesting is that because we have been down against the US dollar for a while now, you can see just in the past year or so, I mean, we've been down 16.5%. It's come back a bit since then, but where are you expecting it to head?
Look, I think it's going to get right up sort of over that 82 to 84 cents. I think it's going to go right through that prior peak that we saw, those several months ago. I think it's going to go right up there. But I haven't finished my full analysis on it yet, but I've been working on a whole lot of cycles and a whole range of other analysis on it, because to me, it's really important to understand where this US dollar is going, because the more it goes, our Aussie dollar goes up against it, obviously the cheaper fuel costs are going to be for us. That's number one. But there's a whole range of benefits for us having an Aussie dollar slightly higher. But I know the RBA likes it around 70 to 80 cents. So it doesn't like it much above that. So I'm not sure at this stage where it'll go too much past that 82, 84.
Look, I mean, there are people who benefit on one side, and then there are people who are going to lose out on the other side. But I agree with you. I think it's going high. I'm just not going to tell you where I think it's going to yet until you tell me yours. Show your cards.
Me, I don't know. We're not in a school playground at the moment, Janine. It's basically, these are the people that want to know where it's going to go, because we're all getting excited. The euro's going up, the pound's going up, so we're all booking holidays in Europe.
Okay, what I'm saying to you is you give us an update next time after you've finished your research, and then I'll tell you what I think it's going to do. How's that?
Women first. That's what I reckon. Ladies first. What do you reckon?
Beautiful.
Have we done with the currencies, or we're
I
going
was
to
just
keep
going
going?
to ask you the same thing. You finished?
I'm finished.
Okay, that is it for our thoughts on world currencies. Now it's time to get into our first email for the night.
Okay, our first email question tonight is from Ben, who says, "Hi guys, love your show. I'm a long-term investor and bought NWH for $2.17 back in February 21. This was a bit of a rookie error as I was trying to catch a falling knife and it just kept falling. The monthly chart is looking good now though, making higher lows and higher highs. I'm tempted to take a small profit now I'm back in the green, or do you think I should hold on? Thanks, Ben."
Right. This one's actually got away from me a little bit, but look,
It's got away from me.
Yeah, the chart did. He actually bought somewhere back here he said 217. So there's 217.
Yep, in February
21.
Yep.
Okay, now it fell away since then. He probably was pretty worried about his decision back then, but it actually looks quite nice now that it's actually taken off.
I think he would have been very worried about it.
Yeah, so look, it actually would have been a bit of a roller coaster ride, wouldn't it? So a 37% drop to recover back towards his buy price at this point. And right now, if that it holds above this level here. It may just trade up and down for a little bit before it continues higher, but the longer it stays above that March 2022 high, the better it'll be, and it could just shoot up from here.
Yeah, I mean, look, it's looking good, but it's like, to me, it's like, why did you buy in February 2021? What was the research around that to say, yes, I want to buy this stock? And your price fell away quite heavily after.
Are you saying that from the point of view that he can learn from it, or what are you saying?
Absolutely, you can. You learn from the mistakes, more from the mistakes than you do from your wins. Because wins especially with us guys, because we've got pretty big egos, and if we make a win by making a mistake and get a win from it, we just think we're invincible and we'll do it again. But when you make a mistake, you should learn from all of that. So what is the analysis he did at the time, and why did that come to him saying, I'm buying that stock right now?
Yeah, okay.
Okay, because that might still be valid right now. It's just that the price kept falling away, which he caught a falling knife. So it might be, but have a look at the analysis right now and then set some rules around all that.
Yeah, that's
so if he had no rules at the time, well, then that's a learning experience to say, well, if you're going to hang on to it, have some rules around it.
Yeah, great.
That's what I'm saying there. All right, Janine, we've got a caller on the line. Welcome to the Australian Stock Market Show. You're on with Janine and Dale. Who have I got on the line?
Yeah, you've got Tom.
Fantastic. Tom, welcome to the show. You've got a question for us?
Yeah, mate. I'd just like you to have a look at stock code RXM, RX Minerals, for me.
Have you bought that, or are you looking to buy?
No, I purchased it in March, April this year. I think my average purchase was 0.23%.
Yep.
Yes, and it's sort of fallen away since then.
Okay. Why did you buy it back then?
Well, they're a drilling company doing exploration drilling here in South Australia and in Nevada, USA. They've got promising results, acquisition of land, and they've just signed some contracts and stuff, and getting close to starting mining production.
Gotcha. Did you do any other fundamental research on it?
Not really. I'm sort of a rookie still in the market, and I'm sort of waiting to start doing your course. So I just did some research in regards to what the company was doing and what their potential was in regards to what they could mine and stuff like that.
Fantastic. Thanks, Tom, for being so upfront and honest with us. We really do appreciate that. Janine's got it up now. Yeah.
All right, Tom, we've got the monthly chart on the left-hand side, so I thought we'd just take a bit of a look at the big picture, and you can see there that we don't know whether it was a backdoor listing or what the history was, which would affect whether the more recent data is what we've got to focus on. But it looks like, I mean, just looking at these previous highs here, so that's 19 cents. Okay, let's go forward. Actually, I'll just drag this across so we can have a look more recently. So we can see there that high there is about 22 cents. So there seems to be some peaks that occur around those sort of levels, 26 cents. We've seen the high of this month occur around 23 cents. So I'd say, it really needs to get back above the high of this month to prove that it's actually going to go on, because the risk is that it could still just keep falling away right now.
So where did he buy it?
So he's bought it back here. If we go and have a look at the weekly chart.
Yeah.
He's bought in here early this year somewhere.
Okay, gotcha.
Okay, and it's fallen away, and that's what he's really concerned about. So I can't remember the exact cents that he bought, but it's probably down about 40-odd% from where he paid when it fell to this low, but it's since come up from that. I mean, looking at it more shorter term, if it gets above this high, 23.6 cents, it should just keep going.
Yeah, it should just keep going. I mean, I think Tom, you replace the name Tom with any name you like, and how many times have you heard the same story?
I'm sure Tom wouldn't appreciate that.
Well, I know that. I know his mum gave him the name because she liked it, okay? But you've heard that story where somebody, I go, why did you buy it? Or you said, why did you buy that? And they go, well, there's promising drilling report, and they're buying this new mine, and they're doing this and that.
Oh, yeah, how many stories have you heard
and we've
about
heard
those
that
companies?
Thousands of times. And it's always that if come story.
Yeah.
If, and it's like, because none of that is whilst it's news, it's not a reason to buy a stock, is it? It really isn't.
No, I mean, but looking at where he was buying it, the fall was actually slowing down at the time. So, and if he bought somewhere here in, I think it was February, March, I can't remember. In March, it started to move back up again. So it would have given some a false sense of reality that it was actually taking off again.
Well, that's why it rose, because they would have been pushing hard on those drilling reports. And you see that, and you see the media, you see brokers, you see all of those people really pushing these stocks hard. But until somebody's prepared to pay for something, then you don't have anything. And that what happens is they entice new investors into stocks like this to push the price higher, and then obviously the smart people aren't getting into it, and then obviously it goes out because they're taking profit. So it's really about looking at the charts as well and learning, and you're going to learn that, Tom, when you do the course. So and I can guarantee you're just going to get all these aha moments in the course going, oh, that's what I did wrong. Oh, yep, that's what I did wrong. So you're going to get that. So great for bringing up that stock and being so honest with you. So big thumbs up for you, Tom.
Yes,
anything else you want to say before we go?
So just at the moment, I'd say just decide on
Yep.
where you're going to draw the line in the sand.
Yep.
If you're going to exit, that's all. At the moment, it looks like it could go up, but this week it's down, so we've just got to wait and see whether it recovers or not. But you don't want to just let it keep sliding away.
Yeah, you want it to be a good buy, not a good buy.
Yeah, exactly.
Good buy, not a good buy. Cool. All right, so we're going to move on.
That's an old one.
Thank
You got any new material?
Move on.
I'm a tough customer today. Before we get into our next email, if you enjoy watching our show, then hit that like button now. Our next email is actually from Anton. Hi both. I love that. I've got a question about indices and their psychology. That is, how resistance levels work for an index. I understand that for a single stock, a resistance unfolds, and basically everyone is aware of a certain resistance level and acts aware of it. The value of an index, on the other hand, is calculated based on all its constituents. So how does a resistance on an index then work in reality? Is it really the case that most of the big players stop buying or start selling stocks in general when coming close to an index resistance? I can't explain it any differently on one hand. On the other hand, it seems hard to believe that it's really the case that so many or the majority of big players are making their decisions so strongly aligned to potential resistance levels of the overall market. What's your explanation on that, Anton? Great question. Gee, he's really thinking, isn't he? He's thought in depth about this, and resistance is an important thing. And I guess sometimes when we're talking about stocks that we tend to talk a bit about where a stock might stumble, meet resistance or find support. But in reality, the big players out there, a lot of them, are not actually following that information. So, and probably in the last decade, I remember when I started learning the stock market, none of them they were all on fundamentals. All the funds were.
Oh, yeah, they were.
That was just totally fundamental driven. And then I think post the GFC, that sort of shook things up a little bit and started to change it. But probably in the last decade, I've seen more of a swing to more technical analysis. And it surprised me that
It's still not big. It's still very, very small on that.
Look, I think it's one of those things that because it was seen as a bit of like, voodoo, I think there's a lot of companies that actually are using it, but they're just keeping that behind the scenes and not telling people.
Yeah, I think it's more brokers. I mean, obviously, the big end of town don't buy indexes. They buy the stocks. So therefore, why do we need to understand support and resistance on an index as much? Because as Anton's right, he's saying, an index is the product of all of the stocks within it. But when you look at a stock like the telco, an index like the telco, that's Telstra. So whatever Telstra has as support or resistance is going to be on the index for telcos pretty much.
Big end of town do buy big indices, like in terms of the funds. They would invest in those funds.
They invest in the stocks in those funds.
Yeah, but it depends. You've got to go and have a look at what's available. There are so many different funds on the market now. To keep up with all of those and what they're doing, it would be a full-time job for a team to work that out.
Those resistance levels all created exactly the same way. But I think people overdo the emphasis on support and resistance because it's like every single person knows support and resistance. I say everybody watching this show would know support and resistance, what it effectively means.
But on the surface level, though.
Yeah, that's what I meant. And so it's on a surface level, but everybody knows about it. So the big end of town play on that, on that people knowing it and people not buying when a stock is hitting that resistance level and then waiting for it to...
But questions like, well, okay, there's a resistance level there, I've seen it in the past, but then why all of a sudden does the share price shoot through that?
Well, I was just going to explain that, but you can do that now.
But a lot of people don't even have a clue about that.
No, they don't. But how many times do you see that? Because that's the big end of town watching that and playing with the market to get people to buy. And so there's vacuums created around support and resistance. So it's is it something really important?
Look, I think that if you also consider that in nature that there are laws and relationships, there's mathematics involved, and that there's mathematics involved in the stock market, believe it or not, in relationships. So it goes through everything. It's like there's a relationship between the length of your nose and the length of your finger, isn't there? Well, it's the length of your arm and some other appendage. You tell me what it is.
Come on. Are we going to keep this above the belt or something? Or where are you going with all?
Okay.
Sorry.
Let's move on then.
Support and resistance. I thought I'd get some support from you, but it looks like I'm getting resistance at the moment. So Anton's from Austria, so thank you very much from Anton for doing that. Great question, matey. And I do appreciate you sending those emails in, asking us those really good questions. But Janine, I think it's time we get into our topic for tonight, which is all about whether now is the time to look at diversifying your portfolio away from the major banks and get onto the second tier banks.
Now, this topic raises loads of questions. It's what I call a very juicy topic. Firstly, Dale, who says always pick the biggest and most liquid stocks?
Juicy topic? Where the hell did you get that one from? And banks? No, don't even bother answering that one. I don't want to hear your answer the way you're going tonight. Now, who says always pick the biggest and most liquid stocks? Is that a trick question? Because if you're coming out, right now you're coming out swinging very early tonight on me.
No, just one that I knew would rev you up, and clearly it worked. The answer is you do, of course.
I also say, where are you going with this, Janine? So, where are you going with this, Janine?
You're the one who always says these things, so I thought you'd know straight away. Secretly, I know you enjoy it when I quote you. While you don't have a huge ego, you do have one.
I think every male's got an ego, and I've met some ladies that got egos too. I'm just trying to keep mine under control most of the time.
Anyway, enough of that for now. My skill is the art of surprise, so just when you least expect it, look out.
Oh, geez, I expected, Janine, but sometimes I just don't understand it, but I do expect it.
Well, back to the banks. Banks are great for generating capital in the short, medium and long term. And post the pandemic, we're seeing much higher payouts from all banks and a return to much healthier dividends. That's why tonight we're going to take a look at some very interesting companies, namely Macquarie, Bendigo and Adelaide Bank, Bank of Queensland and AMP.
Okay, so Janine, what do we need to know about the banks that is so juicy? I heard some intelligent person said to start with the biggest and most liquid.
Now, on your screen, you'll now see a list of the second-tier banks, the largest of these being Macquarie, with a market capitalisation of around $67 billion.
Now, you could hardly call that second-tier bank, but Macquarie is not part of the Big Four. That's really what you're referring to, right, anyway? Any bank outside of the Big Four?
Yes, exactly. Dale, I remembered your name.
Well, thank you. My mother gave it to me, so you better remember it. Okay, second is Bendigo Bank at around 5.4 billion. Bank of Queensland you've got there is around 4.7 billion, and finally AMP 3.7 billion. Now looking at the list, you can clearly see that the last three companies are much more comparable in size. So generally, when we talk about second tier banks, we're referring to these, and we would have included Suncorp if not for the proposed takeover of Suncorp Bank by ANZ. Now my confidence is high that ANZ will be successful, so I have removed it. Now, that is, the Suncorp board have agreed with ANZ proposal, and it doesn't appear that there is another bidder in the wings, Janine, at this stage to create a bidding war. So, what we're saying here is there's really no point in trying to invest in this one right now. Would you agree?
Exactly, you're spot on. And generally we would say aim to have 2 or possibly 3 banks in a portfolio, and this may include a second-tier bank.
All right, perhaps we should also discuss income and then take a look at the charts to see where their share prices are headed. Now, we know that banks significantly cut dividends, then froze these payments in the pandemic. Now, what is interesting is that all of these banks appear to be paying a healthy dividends again, except AMP.
Yes, agreed. I'd like to start with Macquarie. Now, Macquarie's dividend payout has come back to where it was prior to COVID, which is a great effort by the bank. Their dividend yield appears to be around 5.5 or 25%.
Okay,
Pretty good,
well,
isn't
that's
it?
really positive. So how's the dividend for Bendigo and Adelaide Bank then?
Well, it's interesting. It looks pretty healthy also, but actually the current level is not back to where it was pre-pandemic.
Oh, okay.
The same can be said for BOQ, so both appear to be on a path to raising dividends, which could create investor interest as dividends and share prices head higher. The market loves news of a hike in the payout ratio.
Oh, indeed. Now, AMP, This one is different than the others on this list, isn't it? After all, this company has struggled for so many years now. So the question on AMP, after it has constantly disappointed long-term shareholders, is this a possible turnaround story? Now, I never thought I'd say that about AMP, Janine, but I'm sure everyone wants to hear about that. Now, am I getting ahead of things before we get into the charts? What's happening on the dividend front with AMP?
Yes, this is one to watch. The question on investors' lips has been, will there be any dividends given the state of affairs of the company? But AMP recently announced a return of capital to shareholders following the sale of a number of assets, which always attracts greedy institutions, especially if there's a whiff of a special dividend.
So that's got to be good for AMP, but it's not exactly ongoing income which many investors are looking for, Janine.
Yes, right you are, and many in the industry wonder what will be left. But what does it mean if ANZ is cashed up, and not only will there be a return of capital, there may actually be a special dividend as well, which the market loves, and a buyback ahead. And on top of that, the company is also actually reviewing their position on returning to the payment of ordinary dividends. But wait, there's more. However, I won't go any further on this just for now.
Well, you did say, wait, there's more, so that implies that you will be saying something later, but I thought you were going to say that if you buy one AMP share, you get a second for free, plus you get an amazing air fryer.
This is not the shopping channel, Dale. But I guess we're looking at buying, and some treat the market like they are going shopping. Looking at this from an income perspective, if that was your priority, you would not be able to choose AMP right now.
Now, AMP has really been off my radar for not quite some time, Janine, decades, I think. But gee, when it rains at AMP, it certainly pours. However, history has demonstrated not in a good way, but I am willing to be convinced that this could be the turning point. So just give it your best shot, okay?
Yeah, it's interesting, but I'm not here to convince anybody, because investors should be setting their criteria for stock selection for their own portfolios and then searching for the stocks that suit that. If you do not know how to do this, then I suggest that you chat to one of our lovely education consultants who will help you work out what you need to do to fill the gaps in your knowledge. When it comes to discussing a turning point for AMP, I do believe these decisions made by the AMP board will ultimately lift the company's share price, but risk must be a consideration given the uncertainty around earnings, which the board are working on. Many in the industry wonder whether they can get anything right. We will look at the chart of AMP shortly to gain some insight.
Cool, may need a magnifying glass, Janine, for that one on AMP. So now to earnings. So how do the other companies look when it comes to earnings? Now, I know not all companies have reported yet, have they?
Yeah, that's right. It appears Macquarie and Bank of Queensland released results in October, and currently Morningstar indicates Bank of Queensland and Bendigo have 2-year average earnings forecasts for positive growth. And typically banks show forecasts in single digits. Macquarie and AMP are currently showing negative 2-year earnings forecasts, but this is on the back of double-digit growth in the prior year. So currently it's not possible to conduct a clear comparison between each company on the fundamentals. We will revisit this if enough of you tell us that's what you want. So make sure you let us know and leave your request in the comments below.
Well, do that. If you want us to cover this and provide an update on the banks, you have to let us know. And the more of you that do that, the more likely that we're going to deliver what you want, and the more or greater your understanding will be. So get your friend and your family and your dog to request it. How's that? Now, as we wait for the reports to be released, that doesn't stop us looking at the charts, which Janine loves to do. So how about we get into that right now?
I say yes. All right.
Okay, so what have we got up on the screen? You know I used to call AMP DOG.
No, you didn't.
Didn't I?
No. You used to call Telstra DOG.
Oh, okay.
Now you're extending the story to another stock.
DOG too? Okay.
Oh, excuse me.
Okay, so what are we looking at? You're looking at this spaghetti chart that you've done.
All right, yep. Now, I actually had to laugh because I saw somebody online do a presentation with a whole lot of lines on it. I thought, that doesn't mean anything to anybody. But here I am doing the same thing. But
Well, it
I'm
means
hoping
something to you and me.
Yeah, I'm hoping that we'll actually be able to tell somebody something that's important here off this
This
little
is the
spaghetti chart.
1,000-year-old trading secret that nobody knows about, that we're just showing everybody.
That's right.
Yeah.
All right, so you can see here that I've got AMP, Macquarie, Bendigo and Bank of Queensland. Now,
Yep.
AMP, believe it or not, is actually
Done quite well, hasn't it?
Its trajectory has started to improve. It's more or less been bouncing along the bottom, but this is only a graph over recent months. So we're not talking, over recent years. If we were looking recent years, AMP would be crawling along at ground level. The banking sector is this black line, but really what it's showing you is all of the banks are following the same sort of trajectory, just bouncing at different levels of volatility, and that's really the point. I think, one of the things that we've talked about earlier was the fact that with some second-tier banks, at times you can actually do better than some of the majors, and we're going to show some information about that. But Macquarie's often a standout performer, isn't it?
Look, if you're going to look at the banks in the top 10, because Macquarie's in the top 10, it outperforms all the other big four.
Yeah, well, just because, as we said before, just because Macquarie's not in the big four, generally we wouldn't call it a second-tier bank and compare it to the others, but it sort of stands on its own, a class of its own, really, doesn't it?
Yeah, and it did. It was outstanding before 2007, and it was outstanding after the COVID low. It was outstanding, the performance on that stock.
Yeah, although it got slammed during the GFC more so than the other banks because it's an investment bank.
Same with COVID too. It got slammed more than that because it's one of those banks that does get slammed a hell of a lot more, but when it goes, it goes.
So look, I'd say that's just an interesting comparison to show where things are at, but when these start to really tick up strongly, now this is actually the weekly line chart that I'm looking at here, but when they start to tick up strongly, that'll be a really good sign for these stocks. So first of all, let's have a look at Macquarie. Now, the interesting thing about Macquarie, if we look long-term on the monthly chart, and I'll just get rid of my lock, you can see here that from the low in May 2012, Macquarie actually grew 250%. Now, I've thrown in a chart of CBA just as a quick reference so that we can see what's going on with CBA. Now, you'll see that from May 2012, it grew 99%. So Macquarie actually doubled. By comparison,
so that was to 2015.
That was the high. It's not the exact month. Some of these charts I've shown, the rise is to the high that the individual stock made in 2015. So this is before the Royal Commission hit.
Roughly around 3 years.
So I'll go back to that Macquarie chart again, and you can see that gain there that happened on Macquarie. So with more recent price action, if we look over what's happened in the last 5 years, so this is 5 years on Macquarie, we've seen 86%. Now, that's probably the best that I've seen off any bank.
Yes.
The issue is, will it do it from here? And this is the whole point of this discussion, where are these stocks going to go from here? So Macquarie's trading sideways at the moment, more or less. It's been down and sideways. I think that it has the potential to go to 250, 260. However, it's got a lot to do to prove that it's going up. It's really short, at the moment, as we saw on the weekly chart, it's down this week strongly. It needs to start heading back up before we know where it's going, because the real risk right now is that Macquarie, if anything goes wrong and comes out that the market don't like, we could be down to 130, 140.
Well, I think just at the moment, because it's stocks, this is where people talk about stocks being over and undervalued, and I think all Macquarie's doing is just coming back to its normal momentum pretty much.
Well, is it though? Because look at the strength of the more recent rise. It's actually outpaced.
Super fast, though.
It outpaced anything that it's done for a long time.
And that's what I mean.
Really
it's coming back to being normal.
Yeah. So, if we look at the length of this line, what you're saying is it's coming back to the angle of that trend, but it might just want to hug that line for a bit longer.
Absolutely.
And the risk is it could dip below it if it does, stay there for too long.
I'm interested, but I'm staying out at the moment.
Yeah. So look, Ben, which is the next one. So I've got the monthly and weekly chart of Ben, but I'm just going to expand up that monthly chart. Now, what's interesting is Ben did a quick, just as good, if not slightly better, than Commonwealth Bank during that period there from 2012. So that I think this bank has a potential to do this again, but the risk is to the downside over the last few years. So we can see it's actually been down 18.29%, where Commonwealth Bank was in the positive over the 5 years, but only up 9.
Because this is a pretty good bank. It's all over the place.
Yeah.
Everywhere you go, you see Bendigo banks, don't you?
You do. So we really need to see some further moves up on this bank over time, because it's been hit so hard. But this is an example of sideways long term. It's been going.
Get in when it's going up and don't stay and hold.
Yep. Bank of Queensland, there's the monthly, just a quick snapshot of the monthly and weekly chart. It's down just recently. But from a pattern point of view, an analysis point of view, it looks beautiful in terms of its potential long term. Now, we saw 144% over that period there to the high in 15. Commonwealth Bank, as I said, was only 99% up from the low. we're not saying you could pick it right at the low. That's not the point. It's just checking to see what does a stock do when it goes on a run. But volatility to the downside, this is where the higher risk comes in with some of these second-tier banks at times when the downturns are in, that you could get hit harder on the downside if it goes. But if it turns up and starts moving up more long-term, it's some really nice opportunities there.
I'm excited. What did you call it? You were like, juicy stuff. AMP, juicy stuff. That's what I want.
All right. So now we're looking at AMP, which really looks like the sad end of the stick here, because we're talking about 79% up versus the others, but since then it's had a dramatic fall. I didn't even bother to measure what the percentage of that is. So we can see there more recently we've had this long sideways movement. AMP's still not proven that it's actually going up yet. But as I said, the capital return, special dividends, all those sorts of things institutions like to see. Yeah. But it's just the question that industry, they've had such a bad rap because of what happened in the financial space. And I think with the advisor space.
Yeah.
And I think a lot of people still see that that's where they're at and they haven't really moved on.
Well, everybody, I mean, they are an insurance company, so therefore how do you shake off,
And a bank.
Well, they have been a bank for quite a while, but how many people really know AMP as a bank?
No, well, probably not that many.
Yeah.
Most
so
people
have they done a really good job of marketing themselves as a bank?
Well, I think things are about to change because I've been doing some research and had a look at what they're planning. Not only are they doing something interesting in the retirement space, but they're actually now also going to offer these the ability for people to get loans and get it fast online. So I think there's some opportunities there with AMP. We just need to see a bit more of that materialise.
So is that the stuff that you were going to cover on AMP that you said you were going to make us wait for?
I will make you wait just to see the analysis. But
well, you did promise you were going to talk more about it later on.
Did I?
You did.
Well, I still have to hold some cards to the chest, don't I?
Oh, jeez, I don't know. You keep me guessing all the time. Keep me guessing. Have a look at this, and this is the whole history of AMP, right?
Yep, so just open it up a bit more. Yep.
Yeah, just open it up or squash it up.
Now, I can remember you talking to somebody when they someone bought AMP years ago, and I could remember, I think it was a student. They bought it while it was a catch a falling knife.
Yep.
And you said to the guy, "What are you doing?" And he didn't know. And you said, "Well, you need to make a decision. I can't help you. I can't make that decision for you. You've got to make a decision about what you're doing, about whether to sell or to hold." And he kept on holding, and I think week after week he was still holding, and he still hadn't made a decision what to do. And the price
a lot of people
plummeted.
about that with AMP, because I mean, when it floated, if we go right back here on AMP, when it floated, I mean, I was in Sydney, North Sydney, standing in an office in North Sydney on the day it floated, and I remember sitting outside having a cup of coffee near the ASX boards at Sydney, and people are going, "Wow, this thing's gone off like a rocket that day," but it went up and back. And straight away, you knew this thing was going to fall away because of the way it acted on that. I mean, this is a monthly chart, but if I go down onto the daily chart and we have a quick look at the daily chart of that first day. Where is it? I'm lost here. We're not even back to that point, are we? Look, there's the first day.
Do you need a magnifying glass?
I do need a magnifying glass. I'm old, but I'm not stupid, okay? Here's the first day. So it opened right there at $24. It went right up there to $30. Now it was different pricing on that day, but look at it. It just went up and came back and closed right down here. And then I was saying to people, "Nah, this is not really good." And from here on in, it just did nothing, because that's a sure sign of people, trying to stag profits. But it's been disappointing the whole time. That's why I can't get excited about this stock, Janine. I really can't. Even though, if I go back to the monthly chart, we've had some really good runs on this. If you look at this run, that was a massive, beautiful run here. If I put your little famous little tool on here, but you look at that run, 302%.
Look, I think the PE for AMP is really low at the moment, and it could indicate that we're going to see further rises on AMP. I think looking at what you're saying is it has the potential when it does get going, but most of its history it's spent falling, and that's
well, how many
part of the
times does
issue.
it disappoint you? Think, okay, we might get a buy in AMP, and then it falls away, and then you let it drop, and then you go, oh, there's another buy maybe coming up on AMP, and then it drops away. So what will tell us that it's going to stop falling? Because right now we're coming off under $1 now on this stock.
Yeah, and a lot of institutions don't even want to look at stocks if they're under $1.
So what has to happen?
Well, it really needs to stay above $1. The company needs to show that they've actually been able to do this capital return, that the market actually has faith that they're actually doing what they say they're going to do
Yep.
for a first. But there's a whole lot of things that still are unclear around AMP until the rest of the industry start to see some moves coming from them and positive, I guess, to the bottom line. How are they going to believe in AMP? But I think from a trader's perspective, I think there are opportunities in this stock.
I do think there's opportunities on it, but this stock has been, has a bad reputation and rightly earned with the share price that it's talking about. But you're talking about a company that's over 100 years old that had a hell of a lot of dust in their cupboards and old stuff they had to clean out, and it's taken them so long to do that, to clean all that out and restructure themselves. And obviously with the GFC hit, and then obviously the Royal Commission and all those sorts of things that came out into the financial services industry, all of that, it's had so much to deal with. But to me, it just did it too slowly. And it really did it too slowly. So it's about looking at this and going, okay, how does this compare to the other banks? So
look, this could be the bottom. That's the thing with AMP right now. But in terms of volatility, the risk to the downside, there's always risk. But I don't think that AMP is going to fall much further than where it is now.
So it may not fall any further. So going back, so this is all the stock you want to talk about?
Yeah. So if we go back to BOQ and Ben, because those are the two banks that you and I would tend to compare to each other.
Yes.
So when looking at those two banks, we can see that BOQ looks like it's finding some really nice support where it is now. There may be some further downside. We're not completely clear on that yet. Ben tends to be, more stable over time. It's sort of tended to track a certain price range, as you can see across there. It sort of wants to stay between $9 and $12.
Trading stocks at the moment, really, aren't they?
It's not as easy to look. Really, short-term traders can make a mozza out of these trading really short-term at the moment when they are sideways. But the really good money that you want to make out of them is when they get into the trend, and that's the lower risk trade. As you can see, this rise here of 111%. You get a few of those over history. I mean, here you can see that the price went up. There was a decent run here. 67%. When we came out of the GFC, there was a decent rise. Most banks were rising during that time and gave decent returns, 82%.
Over short periods of time too. That's pretty good.
We're seeing this here again. So these sorts of banks can give these sorts of returns over a short period of time, 119%. So if we got that again, we're not sure yet whether the stock's going to trade below this low here. And if it did, well, then you just walk away from it for a while and just wait until it starts proving it's going back up. It'd need to get back above $10 at least.
Well, that last rise, 119%, that was 11 months. That's a massive rise in 11 months. And people say that some of these big stocks can't actually move that fast.
But that was COVID, so you can't look at that in isolation. You've got to compare it to the other ones.
Well, we did get put in isolation with COVID.
Yeah. But, I mean, Bendigo, Bank of Queensland, rather similar sort of situation in terms of its rises, and it has them around the same time. So it's a bit like we've talked about Rio and BHP about, watching certain companies at the same time. They might not trigger entries at the same time, but you might find that there is an opportunity to trade them.
So your pick on these
time.
is Bendigo and Bank of Queensland right now?
Well, I'm suggesting that AMP is a higher risk scenario, but there is a capital. Yeah, there's a capital return. I wouldn't say it's necessarily the bottom. It's got to be fit for purpose.
So where is it on the list?
So if you're looking to trade short term, I think that's a really good opportunity to trade short term.
Okay.
Bank of Queensland and Bendigo could be more medium term, but when it gets above certain levels, so we've got to see a really strong move up on both of those before we're willing to go into those. But we could make some really nice returns on these banks and get some good dividends on them. Yeah. Macquarie. I'd say, look, I think Macquarie could have one more run to go, but it could be at a top right now. That's the other risk. So with Macquarie, if it keeps going through that high, trades up strongly towards that high, it could take out the high and head to around 250. That would be a nice little return for Macquarie and, more certainty, I guess, than, say, an AMP if you were looking to compare. There is no comparison, really.
Well, there's no comparison to this to AMP. They're exactly polar opposites, aren't they, really?
That's right, yeah.
So Macquarie's number one on your list, Bendigo, Adelaide.
Macquarie's number one in terms of quality, but I'm sort of leaning towards Bendigo and Bank of Queensland as the opportunities.
More immediate opportunities.
Yeah, unless Macquarie turns around quicker.
Okay, and then AMP bringing up the back end of it all.
Yeah,
But
well, look, I really want to see AMP.
But it's not last on the list according to you.
Well, it depends. It's got to be fit for purpose. So I really want to see AMP recover. I think, it's got there's a lady chairman now steering AMP.
I'm excited.
That's fantastic.
I'll get excited when the price starts to move up.
They've been selling off.
Sustained.
They've been selling off assets to free up the cash, so they've got an incredible amount of money just sitting there.
So, what do you think they're going to go on the acquisition trail and start buying some good assets?
Well, that would be awesome. I mean, that would the market would look at that and say, okay, what are you doing? But they'd have to get that right. I mean, it'd be a really tough judgment if they then made some mistakes, wouldn't it?
Well, why didn't they buy Suncorp's?
Well, that was what I was thinking too.
It would have been perfect for them.
Would have.
Would have been absolutely. But they let.
Well, they got ME Bank, didn't they?
Actually, I can't remember
They've got
possibly, but
ME
somebody
Bank.
will tell us in the comments below whether they got ME Bank. I can't remember,
Yeah, I'm pretty sure.
But that's a good bank, ME Bank.
It is.
So, but they just need to get out on that, get the war chest out, and start building,
exactly.
and hopefully it turns around. So, there you had it from Janine. It's really much our topic for tonight. So, look at those stocks and make up on your own mind about these second tier banks. But there is some really good opportunities for you. But now, before we get into our next email, given you at this point in the show and still watching it, it actually means that you like what we're doing. So make sure you hit that big like button now. It's just down below there. It doesn't take you long. Janine and I will sit here and wait for you until you do it. So
are we twiddling our thumbs?
we're twiddling our thumbs for a minute. And if the counter's not going up, we're not going anywhere. Nah, all done. Hopefully you've hit that like button now. Now, I do hope you have your phone ready and have been patiently waiting for the opportunity to call into the show and ask Janine and I your most burning questions. Now it's time to get dialing. The number you need to dial is 03 for Melbourne 9290 9988. That is 03 9290 9988. So get dialing now. Don't be shy. Janine wants to talk to you.
While you call us, we will get into answering the next question, so call now.
Okay, our next email is from Ari, who says, hello, Dale and Janine. On Monday, the 15th of August, 2022, I bought GNG at $2.46, and it has just made 2 weekly closes above the all-time high, or the new all-time high. I think I bought safely as the momentum is strong and price looks to be going vertical from here on in. Do you see this stock as setting up to be in a longer-term trend? Thanks in advance, Ari from Indonesia. Now, I think Ari's a former student of ours.
Right.
Because he sent to about 6 or 7 charts.
Okay, fabulous.
With some analysis on it, but I've heavily edited his email.
Okay.
And left the prime bits because the rest of it, most people wouldn't understand us talking about it.
Well, let's get into the stock, and I really like the look of this share that he's picked.
So you got Janine excited, Ari?
So as he said, it's gone to a new all-time high.
Okay.
Which is fantastic.
That's exciting.
That is exciting. It's exciting to see a stock go to blue sky. That's really important because it means it's broken all of that resistance. Now, I would challenge anyone who hasn't done our course, because we talk about support and resistance, to tell us where are the support and resistance levels overhead, and I bet they'll have no idea.
Ari told us.
Yeah, but okay. But you said he's possibly a student.
Yeah, I'm pretty sure he is. I'm like 98% sure he is.
Look, I'm really excited about this share and where it could go right now. There's a possibility that we could see it head... originally before it broke through that high, I was thinking possibly around 250, 260 is where it could go to in the short term. So, it's nice to see. What are your thoughts on that share?
I think it looks bullish. I think it looks good. It is going vertical. It's going a bit more vertical than it has done before. So, as long as you've got some good stop losses on, I think it's a great pick. Is it long-term bullish? There's not enough history for us to tell how long-term it is, but you'd think it'd probably be going up. It's been going up now since 2020.
It's a couple of years up.
Maybe another year or two up, maybe.
Yeah, I mean, based on history, it went up from 2013 to 2016. That's 3 years.
Yeah, so we're probably getting closer towards, in the next 12, 18 months of this run, if may not get there a little bit sooner, but we don't have enough history to determine all that anyway. Is that it for G and what is it? G and
and it looks like we've got another caller on the line. Hello and welcome to the Australian Stock Market Show. You're with Dale and Janine. Who have I got there, please?
Hey, how's it going? It's Gerald from Country in New South Wales.
Oh, fantastic, Gerald. Great to have you on the line. How are you tonight?
I'm very good. How are you?
Good, thank you. Looks like Gerald's gone. All right, thank you very much.
He's deserted you. He's given you... I hope it was a compliment.
Yeah. All right then. Okay.
We don't know whether he owns it or not. because you were too busy laughing.
I was. VAS, all right. So we've got the monthly chart on the left-hand side and the weekly chart on the right-hand
Do you want to go
side.
to the monthly one or the week one?
Now, is this an ETF? What is it?
Well, actually, it is an ETF. I was actually going to say, if you want to be like Gerald, give us a call right now on 92909988. But I don't think I want any more compliments from you because you'd just lose the plot.
Thanks a
but
lot.
Give us a call anyway.
It's all good. All right, so you can see there that we've had this pattern that's pretty much like our market. I mean, that's what it looks like. It's replicating anyway. I think that we could see it come back for a couple of weeks. And to confirm that it's going up again, Gerald, it really needs to get above this high here, which is 88.95. A move above that 88.95 and we could be heading back up to these recent highs. But just keep an eye on it because if it falls below 82, then that's a real concern and we may see prices at lower levels there.
Well, it hasn't been as strong as the market, and I can't remember. It is an ETF, but I don't know what.
Well, let's just have a look at the downside so that we can see how far it's actually come back. So we can see the drop was pretty much in line with what the market did.
Yep.
And, you know, there was always the risk, and we've talked about it before, that this little sideways move back here is where the market could come back to. It looks like it's tried to come back and test that.
Yep.
But it's just still open as to whether the downside's finished yet.
Well, I mean, if it's going to track the index, it's probably going to go down for a couple of weeks.
Yeah,
that would be my
that's what you're thinking on the market.
But yeah, but I mean, it may be this week we're going down, and I know we've been a little bit bearish so far this week.
But that rise we've seen, we've got 1, 2, 3, what is it, 4.
Yeah.
You know, but when you see that sort of a move up on the market with 4 or 5 weeks up, it's usually a sign that the bottom's
we're 8
in.
weeks up on the All Lords,
Yeah.
and that's the longest move. And I was talking about that on my market report yesterday. So if you haven't seen it, go and talk about it, because I was talking about the rise that we're just having now and comparing it to the 2012, which is the last time we've seen the market rise this strongly over a period, a sustained period. So go and have a look at that. But anything else you want to say on this stock?
No, I think, you know, you're playing the safe bet picking an ETF, Gerald. Maybe you've got some stocks in there at some stage you'd like to chat with us about as well.
I think Gerald should get his brother to call you for some more compliments.
I think that you should just be quiet then.
Well, everybody should call and ask Janine.
All right, now we have a question from Diane. Hi, Janine and Dale. We're interested to know your thoughts on Cleanaway. We hold a small parcel of shares, although that's relative to where we are in life, and are currently looking to hold them long term. But as we're learning more and more about the share market and trading, this will probably change. We're interested in your thoughts on how the following might affect the CWY shares and indeed others. This is about share purchase plans. CWY have just recently announced one for 50 million. What are the implications of these? Now, part of CWY's notification reads, the share purchase plan will provide an opportunity for eligible shareholders to subscribe for up to 30,000 worth of new, fully paid ordinary shares in Cleanaway. So new shares at the issue price without incurring any brokerage or other transaction costs. The new shares will be issued at the issue price of the lower of one at $2.50, being the same price as the placement announced by Cleanaway on the 19th of August 2022, and 2, the volume weighted average price for the 5 trading days up to and including the share purchase plan closing date expected to be the 12th of September 2022. Diane continues to say, for companies becoming substantial holders and then ceasing to be substantial holders, ASX announcements show numerous occasions of CGF, which is Challenger Limited, and at least one other company or doing this over relatively short periods. Your thoughts and feedback are really appreciated. Go Cats, kind regards, D&D.
I like
She
Diane.
just had to throw that one in for you, didn't she?
Well, go Cats. How do I argue with that?
Are they playing well at the moment?
We're on top of the ladder.
Well, look, I don't know.
We've won the last 13 games straight, and we'll keep ringing until we win the grand final.
You're pretty happy about that, aren't you?
I'm ecstatic about that. I'm ecstatic. Nobody's going to beat us.
It's early days.
I think a good person would buy me grand final tickets.
You've still got a month to go.
I know. I still think a good person would buy me grand final tickets from that point of view. Cleanaway. Now, it's share purchase plan. So what they're doing is a capital raising.
Yep.
And the best place they want to do is go to their shareholders to raise some capital. Obviously, they're raising capital with a purpose, which Diane doesn't talk about. So there'd be a reason for that. So what would that be?
That was the thing that I wanted to chat with you about.
Okay.
Because
See?
the fact that she didn't mention anything about what the company was doing, I think shareholders tend to get a bit, I guess there's this bit of a smoke screen that happens when they think I can buy shares without having to pay brokerage.
Yeah, but basically you're buying them directly from the company. They're issuing more shares, and so there's two things they worry about.
Or your dilution of your own
The
shares.
dilution of your own shares, but they also think, I can get more shares without paying brokerage. Brokerage is minimal anyway, but why are they raising the capital? That's the question.
Well,
that
it's
I'd
a
be
really
asking.
positive story that I had a look at. So they're actually raising the capital to buy a company which they've already put in an offer for, as I understand, and it's actually to process organic waste. So it takes the rubbish from our bins.
I process organic waste all the time.
Oh, geez, do we have to go there?
Okay.
Takes organic waste and processes that and turns it into something useful. So it's a clean tech, it's improving the environment. It's what do they call it? Low carbon or
Low carbon,
clean
yeah.
energy sort of scenario that we're talking about here, which is everybody is into at the moment. So I just think it's a great reason to raise capital for Cleanaway and complements their business.
Cleanaway is a great business, absolutely.
Yeah.
So keep going.
So that's one part of it, understanding why they're raising their capital in the first place.
Yep.
But the other thing is, do you want little dribs and drabs of shares? And that's the thing. If you've only got a small parcel of shares, how many shares are you going to actually get?
Well, you
And
can buy up to
is it worth it?
$30,000 worth of new shares, so that's one option. If the charts are saying this is good stock, then I may be able to purchase some more shares for whatever parcel that she would like and ride whatever future wave might happen on Cleanaway from that point of view, or she could just sit back and watch it, couldn't she?
Yeah, now she did talk about that it's going to be a price that's, which was, I had a look at the share price, Diane, it looks like it was pretty close to where the stock was trading at, the price that they were offering,
would be, yeah.
or the volume weighted average over the 5 days prior to that offer date, which is in September. So the price could rise or fall to that, you don't know at this point.
So if it falls, you'll buy at a cheaper price than what they've put out for the offer. Is that what you're saying?
Well, I couldn't understand the market for doing that, for dropping it down to that level.
Well, because why would you buy at $2.50 if you can buy at $2?
But generally, when you see these sorts of corporate actions, often prices do drop, which is interesting.
Correct. So
Which is what's happening now.
You've got to ask the last little question about major shareholders coming in. How does that bother you?
Oh, not at all.
Not at all.
There's always companies buying additional shares, selling shares, so I wouldn't really worry too much about them doing that. It's more what the charts tell us that reveals the story.
Any more on Cleanaway before we
Let's
get
have a look at
Cleanaway
the
with something
charts.
else?
No, we're not going to clean away anything yet.
Else. All right. Now we've got another email. This one is
Hang
from Lee. Sorry, what?
Why are you moving on it? We haven't even looked at the chart for it yet.
We don't need to. She didn't ask about the
You
chart.
said depends on what the chart does, and so did I. And so then we're just moving on. We can't do that to it.
No, we don't need to look at the chart because she didn't ask about the chart.
Oh my goodness, he's getting technical on me.
Go, I've got it. I've got things to do, places to go, and people to see. Okay, our next email is from Liam, who says, "Hi Dale and Janine, I have a question about getting into the stock market as someone fresh out of uni. I have set up automatic transactions into an investing account so that whenever payday comes around, I've already put some money away. But how would you two break down a pay slip? Should I be saving or investing more in general? This would obviously be different for everyone, but what would you recommend? Regards, Liam." Great question, isn't it? And I love it. I got this question from somebody else only the other day as well. Yeah, they said, I've got this new job, I'm making more money than I ever have, and I'm putting, I can put $1,000 away in my bank account every month. Now what do I do?
Right.
But Liam hasn't quoted percentages, but if somebody's out of uni, I'd be looking to put 20 to even 30% of my wages into a savings account. When you're young, and I'm assuming he's young because he's just out of uni, and I'm also assuming he's probably single and he's possibly still living at home. Possibly, it may not be. But if you are those three things, that's a triple whammy in terms of being able to save a lot more money, and you should be able to save 30%.
But if they're living at home, shouldn't they be able to save more? 50?
Well, I'm just saying at least 30%. So if you can save, the more you can save right now while you're living at home, and you don't have partners and you don't have to buy diamond rings and stuff like I do, that sort of stuff, then save as much as you possibly can because the compounding effect will work. But the second thing I'd suggest is start learning what you need to do with your money in terms of how to allocate it. And first thing is number one is education. Learn how to budget properly and how to save, and then start building it up, and then start buying some shares. But maybe you get my book. my first book for free. Just pay the shipping. Go to our
It's
website.
tough for young people at the moment because if they're thinking about investing, property
Yeah.
prices have just gone so through the
Well, how
roof
do you
over
do
the
that?
recent decades, and how do they afford to even buy anything?
I think I heard the other day that the average property now in I'm not sure whether it's just Melbourne or Australia, but the average price for property is now 7 times the average wage, and it used to be like 5 times. So how does a new person, a younger person, get into property? Well, it's not necessarily possible. So where do you go? Stock market, absolutely. And it's easy. It's not hard to be in the stock market, just learning how.
But the timing's so important. How does a young
Correct.
person start out in the right track there?
The timing is you buy my book, you read my book, and then when you finish reading my book, then you might be ready for the market to move and start buying stocks, because it's about preparing yourself to be ready. Why do sports people spend so much time training? So they can play a sport.
I mean, I think when the market falls 30, 40, 50%, it's a perfect time for a young person to put money into the market.
Yeah,
but
absolutely.
are they going to sit
But you've got
around
to
waiting
get prepared.
for that, though?
So that's why he's doing the right thing. He's doing
Saving
a
now.
brilliant thing now. I think this is the best thing you can do. More you can save now while you're young and single, the better, because you'll be able to get into property earlier and have a lot more financial security by the time you're hitting my age, that's for sure. But probably a hell of a lot earlier. So well done, Liam. Big thumbs up from me. Well, Janine, that's our thoughts on budgeting and saving money for land that we answered. Now, I do want to thank everyone who's taken the time to comment in the YouTube comments, or has taken the time to email us. We really do appreciate your feedback.
You've been asking us questions, and each week as we ask you